In the world of investing, there are a few names that immediately come to mind: Warren Buffett, George Soros, and Stephen Cohen. But what if I told you there's one name that stands head and shoulders above the rest? A name that has achieved a level of success so remarkable, it's almost impossible to believe. That name is Jim Simons. While legends like Buffett have built fortunes with traditional investing methods, Simons revolutionized finance in a way no one could have predicted. So how did he do it? What made his approach so different? And what secret formula turned his company, Renaissance Technologies, into an unstoppable force in the world of hedge funds? Stick around, because this story might just change the way you think about investing. Imagine this. If you had invested just $100 in Medallion back in 1988, by 2018, that investment would have skyrocketed to a mind-boggling $398.7 million. Over a span of 3 decades, Medallion's returns averaged an astonishing 66% per year. This wasn't a fluke or a stroke of luck. This was the result of one man's vision and a very different approach to investing. While traditional investors rely on financial news, earnings reports, and hunches to guide their decisions, Jim Simons took a completely different route. Instead of hiring stockbrokers and finance experts, he hired scientists, mathematicians, and code breakers. These were people who had no experience in trading, but were experts at analyzing complex data patterns. What he saw in those patterns would ultimately transform the world of finance. Jim Simons wasn't just an investor, he was a brilliant mathematician, a mind that saw the world through a different lens. Traditional finance was ruled by instinct, guesses, and human emotions. Simons, however, believed the stock market operated in patterns, and with the right tools, those patterns could be predicted. It wasn't about intuition, it was about data. So he took a scientific approach, using data, algorithms, and massive computing power to make his decisions. This is how Jim Simons cracked the code of Wall Street and launched a revolution. But how did he get here? The journey of Jim Simons is as fascinating as it is unconventional. Born and raised in Brookline, Massachusetts, Jim Simons had an early love for mathematics. His talents quickly set him apart, and by the time he reached his 20s, he was already making waves in the world of academia. Simons earned a PhD and went on to teach at some of the most prestigious universities, including MIT and Harvard. His academic career was thriving, but there was one problem: he wasn't satisfied. Simons was restless, always craving a new challenge. In the early days, Simons wasn't focused on finance. His first real taste of intrigue came during the Cold War when he worked as a code breaker for the National Security Agency. As part of an elite research team, he helped decode Soviet communications. The world of espionage piqued Simons' curiosity, but it didn't provide the fulfillment he sought. He wanted more. With his mind constantly seeking out patterns and solving problems, Simons left his secure academic career in 1978. He stepped away from Stony Brook University, leaving behind his tenure, and dove headfirst into the world of finance. His decision was a big one. After all, the finance world wasn't exactly known for its embrace of mathematical geniuses. In 1978, Simons founded Renaissance Technologies, initially called Manometric, a small investment firm in a strip mall. This new venture wasn't just about making money, it was about decoding the stock market. Jim famously said, "There's a pattern here. There has to be a pattern." Unlike traditional investors, Simons wasn't going to rely on gut instinct or the latest gossip. He believed data and mathematics could unlock the mysteries of the market. Renaissance's early days were far from glamorous. The firm's first foray into trading was in currencies and commodities, not stocks, which seemed too unpredictable for Simons' liking. But even with his belief that the market was a puzzle waiting to be solved, results were slow. The computer technology of the 1980s wasn't powerful enough to fully implement his vision. The firm relied on a blend of human intuition and math-based models, but the results were inconsistent. The early years weren't smooth sailing. Renaissance's portfolio struggled, particularly in the mid-1980s when one of their key traders, Leonard Baum, suffered significant losses due to poor bond trades. Simons quickly replaced him, bringing in a fresh wave of talent, including his longtime collaborator James Axe, a mathematician from his academic days. It wasn't long before Simons and his team started to collect massive amounts of data. everything from market movements to historical trends dating back to the 1800s. This data was the foundation of their predictive models. By analyzing past movements and patterns, they hoped to identify recurring trends in the market. Simons believed that if they could process enough data, they could make informed predictions. However, even with the expanded team and increasing data, it was still a long road to success. The real breakthrough came in 1990. Renaissance Technologies, now firmly in the world of quantitative finance, began posting solid returns. It was around this time that the firm's flagship fund, Medallion, started to show real promise. But Simons didn't stop there. He wasn't satisfied with just good returns. He wanted greatness. His ambition was clear. He wanted to achieve annual returns of 80%. Many of his colleagues were skeptical, but Simons believed in the power of data and math. He pressed forward, refining his models and expanding his team. By the late 1990s, Simons' team of mathematicians and coders had transformed Renaissance into a quantitative powerhouse. In 2000, Medallion achieved an astounding 98.5% return. The firm had cracked the code. Simons' new model, high-frequency trading, redefined the landscape. They started breaking the day into 5-minute intervals, analyzing even the smallest shifts in the market. This gave them a huge advantage, allowing them to predict price movements more accurately than anyone else. The team's relentless work on algorithms paid off. By the time of the dot-com bubble burst, Medallion was thriving while others floundered. The market's inefficiencies became opportunities for Renaissance. Their ability to predict market moves in real time meant they could profit where others failed. Renaissance Technologies quickly became a financial juggernaut, and with it came massive wealth. The firm's success was undeniable, but it wasn't a wide-open opportunity for outside investors. By 2003, Simons closed the Medallion Fund to new investors, allowing only Renaissance employees to invest. By this point, the fund's assets were capped at $10 billion, and the wealth that flowed through the firm led to what some called the Renaissance Riviera. Employees enjoyed lavish estates and extraordinary lifestyles, but Simons' success wasn't without personal tragedy. In 1996, he tragically lost his son Paul in an accident, and years later his son Nicholas died in a drowning incident. Despite these heartbreaking losses, Simons kept moving forward. He channeled his grief into his work, which continued to shape the landscape of quantitative finance. By 2009, Jim Simons decided to step down as CEO of Renaissance Technologies. He handed the reins to his trusted colleagues, Robert Mercer and Peter Brown. Even though Simons was no longer at the helm, his influence over the firm and the world of finance remained profound. Today, Renaissance Technologies remains a leader in quantitative investing, and Medallion continues to be one of the most successful hedge funds in history. Under Simons' leadership, the firm revolutionized finance by embracing data, mathematics, and computing power, approaching investing not as a guessing game, but as a complex problem to solve. While Jim Simons kept a low public profile throughout his career, his wealth and influence have allowed him to give back. He has donated millions to education and scientific research, particularly in the areas of mathematics and autism, inspired by his daughter Audrey. Through the Simons Foundation, Simons has supported cutting-edge research, including projects to uncover the origins of the universe. Simons didn't just crack the code of Wall Street, he rewrote the entire rulebook. By combining mathematics, data, and a relentless belief in patterns, he turned Renaissance Technologies into a global powerhouse that defied all expectations. His story is a testament to the power of innovation, thinking differently, and following one's vision. What if we all approached our work like Simons, looking for patterns that others couldn't see? Could we all crack our own codes? Drop a comment below with your thoughts. Don't forget to like, subscribe, and hit the bell icon for more stories that inspire and challenge conventional thinking.